Okay, so again, most of my illustrations always start with a box because that's kind of the origination of everything that we're always dealing with. Okay, so an order block, when we break out of the box, what we're trying to do is we're trying to isolate highs and lows that we can measure deviation from based off of this overall business cycle. So when we break out, the reason I say, like, let's say that this, like the one we're working with here is 17 pips, right? I know that as of the contraction cycle right here from high to low, that itself is an order block. And I don't say personally, I don't say bullish order blocks or bearish order blocks like other people. I look at them as neutral. The only way I would label it is I would put it in the context of the trend and the overall trend direction. But when I talk about order blocks, I'm saying they're neutral for measurement's sake. Right here, what I'm talking about is when we break out of here, this box, for instance, on the 30-minute right now that we're dealing with, this is about 17 pips. So this order block right here from the high to the low can either go up 17 pips or it could come across 17 pips. So what I talk about, there's guaranteed movement in this. It's going to happen. That's the initial order block that we're working with right there. As we get what's likely to happen here, as we get an expansion out of that and it comes down, now the order block has expanded itself too. And what we're measuring, the order block is the expansion of this cycle until we get the final hoorah, which is going to be the trend. So as we come through the low point of the box, we have a distance from this high of this low of X amount of pips right there. That is the new confirmed order block size. Everyone with me still? At this point, this box has also turned red. This has now become a major master pattern box. So our expectation now, the way that we look at this, is that we are going to eventually deviate 100% away from the order block size. And this is, again, this is all coming back. The order block, it serves a few different purposes, but the main purpose that the order block serves is giving us projections of distance that the market's likely to move. We can use those when we're trying to figure out our risk to reward and our expectation for our trades. So for instance, let's say that this was 17 pips. Let's call this one, let's say that the order block now is like 22 pips. Let's just say, I don't know what it is, but let's just pretend that that's because we had this little expansion come out of here. It, made that distance there. And now we've come back. So that from the bottom of the box to that high point is 22 pips. Let's say that you're trading this one way or another down. You would project that same distance down. I'm going to try to eyeball that as best I can for 22 pips. So we're now working the bottom side of the order block projection. If you were in a trade, that's handy knowledge to know, especially if the market is overall trending down. Handy knowledge to know that there's a very, very, very high likelihood that when this finally expands and goes to higher or lower prices and contracts and starts over, we're going to go at least 22 pips. So it's really all about coming up with that minimum expectation. I want to know how much money's in the deal before I get involved. Does that make sense? As we come down through here, let's pretend we don't quite make that. We don't make 100% of the order block projection. What is that? Is that like a great expansion that's happening? Like if it's running out of juice and we're coming back up, especially if we're coming back up into this range right here at the low of the box, now we're sitting right there. How much strength is that showing? Or I should say weakness. How much weakness is that really showing to the downside? Not a whole lot, right? So going back to the overall framework of what we expect with how we look at the market, the market cycles, we didn't even go 100%. This is not a great breakout so far. Now we're coming up here. Where's the probability lie in this now? Probably going back up to our expand high point, right? So as we go back up, we hit that expand high point. Now we have two things happen. Now we got three legs. We have 1, 2, 3. So now this box is green. and we have a new order block size, because now as it expands, we haven't trended. We haven't fulfilled the third phase of the market. This is just, you can think of this as the box that started here from that high and low. This is getting into a bigger and bigger box with every leg of expansion. You guys with me on that? So now we have the distance between here and here. Okay. How many pips is that? And I don't know. Again, I'm just drawing this out to illustrate it. I would say that that's probably, if this is 22 from there to there, this is probably, we'll call it 34. So now we got a 34 pip order block right there. Now, if we're right here and we're long, let's say that the overall trend is long, and let's say this is our entry time frame right now. If we were undervalued, which we would have been at this point right here, if we were undervalued on that box, we would be looking to catch this move right here. That's basic strategy, right? We have a defined higher time frame going in a direction. We have value. That's our directional bias. We are now undervalued, and we're not exceeding 100% of the order block. It's not strong enough to push the 100% mark. So if we catch this coming up back through here or somewhere in this region coming back up, and now we're here, we have a new order block size from the swing high, which you'll have a liquidity line there on the software. You will also, when you get through here, you will also get a new liquidity line here showing the swing low. Liquidity lines always go at the blowout points of the market. That's the pain threshold. So from that swing low to coming through this high liquidity line, coming through that swing high, we have, let's call it 34 pips. We project up. Now, I'm going to try to eyeball this. 34 pips up. So as we come up, boom, through that, again, we're trying to figure out how much money potentially is in the deal before we get in. So if we nail it down here, because we're not exceeding the 100% order block down here, this gives us clues of what's really in this market. As we come up through here, we can stick our entry right here, and we know that we initially need to get through value. That's first stop. We got to get through value. Then when we get through value, we got to get through liquidity. Then when we get through liquidity, we need that liquidity to be used to boost the market, not accumulated. So we don't want that accumulated. When we get through there, we need to go 100% of the order block. So there's phases of this progression that you are looking for as you live through this trade. As you get through the top of here, if this is a strong trend, if you guys have done a good job on the higher time frame and looked at the cycle, you've done all this work on your higher time frame, and you have confidence in those candles over here, you're going to hit these 100% order blocks in trend over and over and over again. The trade that I put in the trading floor this week, that trade I got out because of the order block. You guys can go take a look. I made a little video on it. It went further than that, about 40 some pips, but I don't care. If I can nail a trade undervalued right here, which is great entry, great. There's all kinds of benefits to entering down here in a long, and I can max out on 100% order block. If you guys can do that over and over again, you're sitting real good, real good.